Bitcoin currently looks like a waterfall of death. It also appears that Bitcoin has taken out the weekly range low right here at around $53,000, currently hovering right underneath that. Not just that, it appears that we're breaking this falling channel pattern to the downside thus far. However, no confirmations just yet. Now, everyone is wondering, well, why did this happen? What is going on? What led to the meltdown across the board? Because you need to understand that this bleed is not just a tail across the crypto sphere, but also in TradFi. You're seeing NASDAQ down, SPY down. All the assets are just taking a massive dip to the downside. Now, speculation on the street is that this is all just a product of the unraveling of the Japanese carry trade. Now, Sean did go on to speak about the carry trade in the Discord chat just a couple of days ago, actually, even before the dump happened, and he's extremely knowledgeable on the macro plumbing of things. So if you have any questions regarding that, get into the Discord chat and ask away. Also, you can just pop into the Discord chat if you're looking for a friendly community to weather this storm with. But however, please note there is no room for toxicity, so only come in if you're looking to learn, grow, and have constructive conversation. But apparently the Japanese Nikkei, which by the way is the Japanese index, just like how we have SPY, the Japanese Nikkei index closed down 12%, the largest point drop in history, exceeding Black Monday in 1987. But now I feel like talking about the why is a bit moot, considering that we already have the meltdown. Now, question is, what happens from here? And as traders, how do we really go about playing the rest of this market? Now, in my last video with you guys, we went over 3 bull market indicators. This was a cyclical analysis where I went over 3 indicators that often keep me on the right side of the cycle. And it's the breaking of these same indicators, guys. It's going to help us understand whether or not the bull market is still on, or are we heading into a bearish trend. And we're going to see what price is at relative to each one of these 3 bull market indicators. Now, before we really start unwrapping price action relative to our key bull run indicators, there's the one thing that I really want to talk about. When it comes to these dump events, these very volatile dumps, almost looking like reversals, there are 2 plausible cases for this. And this is it. Number 1, this could either be a tail risk event, which are rare events as far as price history is concerned. Now, the second scenario is the most common one, which is an actual cycle reversal, where we go from bull market to bear market. This happens almost on average, at least for crypto, every 4 years. The last time we had a tail risk event was actually COVID. This is where the entire world went into lockdown, the markets panicked, and prices dumped, not just on Bitcoin, but across the board. As far as an actual cycle reversal is concerned, where we go from bull market to bear market, for instance, 20k to 3k, that was one bear market, right? That was an actual turn in the cycle. The other one that we had was 60k to 15k. That was another turn in the cycle. Those are bull market to bear market reversals. So if you had to put a gun to my head and ask me, as far as this dump is concerned, which scenario do you think is playing out? Do you think this is a tail risk event, or do you think this is an actual cycle reversal? I believe that this is more of a tail risk event than a cycle reversal. And it's very important to make that distinction, guys. And why is that? Because as far as tail risk events are concerned, tail risk events that take place mid-cycle can actually reverse just like this, where we actually V-bottom up. Now, the V-bottom up during COVID came in primarily due to government intervention, where they pumped in more money into the market. Could we get something similar right here? Perhaps we could. Usually government intervention historically has only come in during tail risk events like the 2008 financial crisis, like COVID. So we'll be monitoring if something similar comes in right here from the Fed. If the Fed comes out with something radical, perhaps we actually do see a V-bottom up and then perhaps a continuation of trend. However, for now, we got to play price action for what it's giving us. And right now, as far as price relative to our cyclical indicators are concerned, I'll be honest with you, we are currently hovering underneath most of it. So the first cyclical signature that we were looking at is price relative to the monthly 10 simple moving average. We kept it very simple, in that historically, every time prices have broken the monthly 10 SMA, that has propelled Bitcoin into bear market territory, where prices went on to make even lower lows. And as far as current price action is concerned, it appears that we're currently living underneath the 10 simple moving average. However, no confirmation just yet. In fact, this month just started, right? So we still have the entire month to go through before we then find out if this is an actual break in the 10 simple moving average. The 10 SMA currently swinging in at around 56.1k. Now, this is one of the first indicators telling us to be a bit prudent. However, there's one thing that I have observed as far as price losing the monthly 10 SMA is concerned. This actually might present us with a good hedge opportunity. So if this is the monthly 10 SMA, And this right here is price breaking the monthly 10 SMA to the downside. Historically, we've often gotten a retest of the monthly 10 SMA before we then see a spiral down. But this retest right here presents traders with amazing hedge opportunities. So this is to say, if you are someone looking to hedge some of your Bitcoin or hedge your positions, this retest might actually present you with a good hedge opportunity, because alternatively, if we actually do end up V-bottoming up, but you still end up hedging on the monthly 10 SMA, there is a good chance that prices could visit the monthly 10 SMA as support and then rally off it, giving you an opportunity to also get your position back in once again if you want to do so. Right, so this is one observation that I've made every time Bitcoin has lost the monthly 10 SMA on every single instance, once in 2014, once in 2018, once in 2020, and the other in 2022. Every single time that we've lost it, you can go ahead and backtest this, of course. Every single time we've lost the monthly 10 SMA, the market has presented traders with another bounce into the monthly 10 SMA before the meltdown begins in earnest. Now, the second bull run signature we were looking at is price relative to the bi-weekly dynamic, and oh boy, was this an important one. And so far, price is looking extremely ugly against the bi-weekly dynamic, currently living underneath that region. But historically, guys, the bi-weekly dynamic has always kept us on the right side of Bitcoin. Every time prices lived above the bi-weekly dynamic and that cloud is green, that often signals bull run territory, and prices have always rallied. However, on the flip side, every time we've lost it, that has signaled a bear market territory. So this time too, we were actually looking for Bitcoin to defend that bi-weekly dynamic support, and this right now is not looking good against bi-weekly dynamic support. For those of you on the zones, the numbers on the dynamic support, go ahead and take note of them if you don't have access to the indicator. It comes in from around 58,366 all the way down to 53,821. Now, while this looks like immense technical weakness, it is important to know that this candle hasn't closed just yet. We open a brand new bi-weekly candle only next week on August 12th. So getting into the next bi-weekly close, here's what we look out for. If this candle closes over the bi-weekly dynamic, there's a better chance that we actually rally from here on and prices do end up recovering. However, on the flip side, and probabilistically, based on what this candle is doing right now, based on the fact that we took out that previous low, if this candle actually closes underneath that bi-weekly dynamic cloud, there's a better chance that we dump even further. However, in the interim, I will not be surprised if we actually get a test before we get a result on whether or not prices want to break up and reclaim resistance, or they want to dump down even further. So we'll be waiting and watching out for that. Also, quick pan on over to the weekly dynamic indicator, another indicator we've been looking at over here at Mango. Notice the weekly actually closed underneath the dynamic support, and we saw prices immediately spiral all the way down to $50,000. Dynamic currently is red, so this too is currently bearish. This is one of the other cyclical indicators that we've been looking at. In fact, Sean just entered my room and he's like, Krisha, check out VIX, which is a representation of volatility. Guys, volatility right now is equivalent to that of COVID levels as well as the great financial crisis levels. And what did I tell you earlier? The tail risk event. What we're seeing right now is a likely tail risk event, then a cycle event where we're going from bull market to bear market. Now, if Bitcoin fails to see a bounce right here, I say next stop is only $42,000 per Bitcoin. And this is primarily owing to our last cyclical indicator that we usually look at here, which is price relative to the weekly Ichimoku cloud. So far, the cloud is still green. This is a lagging indicator. However, cloud is still green, but notice where prices are at right now. We're currently against that weekly Kijun, and that's why I'm looking for the bounce right here. If we start breaking the Kijun, I will be expecting another move to the downside, getting all the way down to cloud support, currently hovering at around 42.4K. Now, before we wrap up, I want you guys to consider this question. If this is a tail risk event, are you looking to hedge? Well, if the answer is no, then it's simple. Do nothing. Just sit on your hands. And that too, guys, is completely fine. If you are playing Bitcoin for the cycles, not cycles, cycles, multiple, okay? If you're playing Bitcoin for the cycles, you can actually afford to just sit on your hands and do nothing for as long as this is not money that you need. However, if your answer to this question is yes, well, do you want to get back in if prices V bottom up? Now, this is very, very important because you see, during the COVID dump, guys, I actually got out of my Bitcoin trade because all of my systems broke. right? They all got negated, they all got deactivated, so I got out. I had to be disciplined on my systems because that's the only way I can quantify my success as a trader. However, as the weeks went by, I noticed that prices started to rally once again. Not only did they rally, they started activating my systems once again, which forced me to get back into my trade. So the next thing you got to consider is that if you intend on hedging right here, if prices V-bottom up, what levels/systems will you use to spot that reversal? That is very, very important, okay? Especially if you're someone looking to get back in. So make sure you have this point pat down. Make sure you know what levels you're looking at and what systems you're looking at to help you get back into your position in case prices turn right here. And this is one quick painful note that we took away during that COVID dump. This is something that Sean had mentioned in the Discord chat that sort of took me back to that moment. And I think it's very important. Sometimes you're going to follow your systems and you're going to get out of your position, okay, which is fine because you got to be disciplined on these things. That's the only way, like I said, that's the only way you can quantify your success in this world of trading. However, if your system triggers again, okay, and you got to get back in, there could be times where you are getting back in at a loss, which is what happened to us, but we got back in anyways. Okay, we got back in anyways and we were rewarded for getting back in because Bitcoin went on to rally all the way up to $60,000. Had we been stubborn in that, no, I am adamant that I get back the same amount of Bitcoin that I sold right here. If I was adamant on that and I didn't get my position back, guys, I missed out on the entire rally. So my one tip for you guys is that if you guys are forced to get back in into any of your positions, not just Bitcoin, but at a loss, okay, this is considering after all your systems have triggered once again and after things are looking bullish once again, you got to look at it as a fresh setup. Okay, look at it through fresh eyes, like it's a fresh trade. You're starting from zero again and get back in. Right? And risk manage accordingly. Risk manage once again like it's a fresh trade. So this is just one tip for you guys. Of course, we're going to be talking more on TA, more on risk management in the Discord chat, so join the conversation there. And of course, we will be following up with what happens in the macro space as far as interest rates are concerned and as far as the likelihood of a V bottom up is concerned. So if you guys want to follow along with that story, hit the sub, hit the bell icon. That way you are always staying up to date with any of the updates that we come out with. And I hope you guys enjoyed this video with this. Trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.